Let me know whether you can see the shared screen. Are you able to see the PPT? Are you able to see the PPT, everyone?
Yes, ma'am.
Okay, so
Yes, ma'am.
let us start with this risk and return. Okay, so this is the next chapter, unit 3, where we are going to know about the risk and return to a single asset, and then we'll calculate the risk and return to the whole portfolio. So risk and return, as you can understand.
Excuse me, ma'am.
Yes. Yes.
Ma'am, I just want to ask that about the presentation. When can we give it?
You will give it after the class, or maybe tomorrow I'll schedule it. Okay, so let me finish the class first. Okay.
To,
Excuse me,
okay, ma'am.
ma'am.
Yes.
Ma'am, your voice is too low, ma'am.
Voice is too low.
Yes, ma'am.
Now
Okay, ma'am, it's clear.
not completely, or not clear. Let me just check
Ma'am,
it.
it's clear, but it's very low. Like,
Very low. Let me use the earphone, see if it increases. Let me use it. Let me know if it is audible now. Is it audible?
yes, ma'am. Yes, ma'am.
Clear?
Yes, ma'am.
Okay, so let us start. Okay. So moving on, this risk and return are very important variable because whenever you are thinking of investing in a share, you have to see two major parameters. What is the total return, and then what is the risk to your investment. So moving on, let us calculate this return first of a single asset. Okay, for let us assume that the par value of a share, which is the price of a particular single share, is rupees 10. Now suppose you have purchased 100 shares. So in that case, the price becomes 225. You purchase 100 shares at a price of 225 each. So in this case, your total investment is how much? Your 225 into 100 share, which is your 22,500. Is the screen visible?
Yes, ma'am.
Okay. So moving on. So everything I've shown it with this PPT. So list of work you have to do, but listen carefully. So now let us go to the dividend returns. So coming to dividend returns, suppose you know your total return in a particular year from a stock is a sum of your dividend yield as well as your capital gain and losses. This is what we have done in your pre-med SEM. Okay. So say suppose the company pays you a dividend of 25% for the year. So note that dividend is always on the par value. This calculations you have done already. Okay. So if your dividend is 25%, face value is 10. That means per share the company is going to give you 2.5 as the dividend per share. So in that case, if you have purchased 100 shares, so your total dividend you are entitled to is 2.50 into those 100 shares, which is your 250. So for those 200 shares, your total dividend income will be 250 for a dividend of 2.5 per share. Now you have the other component. One is your dividend yield, then the other component is your capital gain or losses on the investment. So if the price of the share at the end of the year increases to 267, so remember you had purchased it at 225. Now suppose the price of the share increases to 267. So what is your capital gain or loss? So your capital gain and loss, you can see the formula here on the board. Your capital gain or loss is your selling price minus the buying price into 100. Okay, into which is your number of shares. In this case, it is your 100. So your selling price, when you're selling the share, suppose it has increased to 267.5. Okay, and your buying price was 225. So as you can see, because the selling price is more than the buying price, so in this case you are making a gain. And how much will be that gain? That total gain is, you can see on the slide, it is your selling price, which is your 267.5 minus 225 into your 100 for 100 shares. So you have a total gain of 4250. So remember, the total return on any asset is your total dividend plus your total capital gain on loss. For a selling price which is higher than your buying price, you had a capital gain here. So now what is your total return on your investment then? Then your total return on your investment is your dividend income plus your capital gain. Okay. So how much you have calculated that? 250 is the total dividend and total return you got is 4250. So in that case, you have 4500 as the total return on this single asset, which is your shares of 100 shares you have purchased. Okay. So moving on. Now suppose the price, how much will you receive if you sell all these 100 share at the end? The total receipt in this will be your total dividend income plus the total sell proceeds. Sell proceeds, which is the at the price, which is the current price level, which is 267.5. So you can see the total receipt on these shares will be 250, which is your dividend income, plus 267 is the current price into 100 share. So your total sell proceed, which you will get if you are selling the share at this price of 267.50 is 27,000. And you can see that, remember, your total investment was 225,100, isn't it? Because 225 was the per unit price and there were 100 shares. So in that case, you had 225 into 100, 225,100 was your total investment. And now when you are getting 27,000 at this 267.5 per share, so you have made a profit of 4,500, which already we have looked into. This is same as this calculation you made earlier. Okay, so you can see both these tallies. Okay, because that is the rent. Now what is the percentage return on your investment? So how much did you get? So that formula for your percentage return is the total return you got from this 100 share. How much? 4,500. So what was your total initial investment? This is the formula. So it is your 225,100 was the total investment. So if you take the ratio, you get a total profit. You made a total profit of 20% on this investment when you purchase the stock at 225, and when you sold it, the price was 267. That means your selling price was more than your buying price. Now from this you can see your rate of return, how you can calculate the rate of return. So your rate of return formula is, this is very important for your exam point of view. Am I audible? Am I audible?
Yes, ma'am.
Can't know you're listening or not. Are you, can you hear me?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay. So
Yes,
you
ma'am.
can see here, rate of return formula is your dividend yield plus your capital gain yield. Now, how you are calculating your dividend yield? Your dividend yield is simply your dividend divided by the price of the stock at the beginning of the year. And how much is your capital gain and loss, which is your capital gain or loss? It is your current share price minus your the stock price in the previous year divided by the stock price in the previous year, beginning of the year. So this will give you the total current return. So now you will be calculating the total current return. Now you can see here your dividend yield, which is your dividend per share divided by the price of the stock at the beginning of the year. So it is dividend per share is 2.50 divided by the beginning of the year price was 225, which is your purchasing power. This is the dividend yield. Capital gain and loss, you can see 267.5 minus 225 by 225. So how much you got? It is your dividend yield 11%. Then this is 18%. Total is 20% again. So already you have calculated. You can go this way. Total depending upon what information is given to you in the exam. So if it is your total return divided by total investment, this is 20%. You can also calculate it by your formula of dividend yield plus your capital gain yield. Okay, and you got the same answer, which is your 20%. So now suppose the price is 200 instead of 267.50, which has increased from your buying price of 225. Suppose the price is now 200. Can you tell me how much will be your return? Calculate and tell me. Can you calculate and tell me how much will be your return? Okay, you can see here. So it is your same dividend yield, 2.50 divided by 225 plus this is your selling price, which is 200 minus 225 by 225. So you can see your dividend yield has remained constant. But now because your selling price is less than your buying price, okay, so in that case, you have a loss on the other part. Your any investment in stock has two parts. One is your dividend part, which is secure, and other is the volatile part, which is the when you are going to sell the stock at the end, then in that case, how much you are getting. So the day you're selling, it is the price is more than or less than your buying price. So you can see you have made a capital loss here because your selling price is less. So the overall loss you got is a minus 10%. So the gist is, if your selling price is more than your buying price, you make a gain on purchasing a stock and vice versa. So now this is the return part we calculated. Okay, so return is your dividend yield plus your capital gain. So let us go to the other part, which is your risk part. So risk means how much risk is there to your stock you are investing. And you can see this risk part is mainly from the capital gain or loss, that side, because your dividend part is secure. Whatever the dividend, depending on the dividend policy of the company. So obviously some returns and policies there, we had looked into that prior to the exam as well. Okay, so you can, depending on their returns and ratio and the sharing of the payout ratio, your dividend part is secure, but what is volatile is the other part, which is the income part. So moving on, let us calculate the average rate of return. So we'll calculate how much is the rate of return for a stock over different years. So you are given some information here. You can see this is the information about given the data of yearly returns of Hindustan Unilever. Calculate the average rate of return on investment on a share over 10 years period. Okay, so you can see here the average rate of return. How you are going to calculate is simply like your arithmetic mean. So it is the sum of the various one period rate of return divided by the number of period. So this is the formula for your average rate of return. So you are given here some data about yearly return of HUL, and you have to calculate what will be the rate of return, average rate of return over the different years. Okay. Am I audible?
Yes, ma'am.
Okay, so for this calculation which I have given you here, you can see here we have to go to the board and do that.